Hello and welcome to the Al-Attiyah Foundation podcast. My name is Stephen Cole, and today I'm delighted to be joined by Mike Finch. Mike is Head of Strategic Initiatives at Benchmark Mineral Intelligence. Now, Benchmark provides price assessments, market intelligence, and data analysis for the lithium-ion battery and electric vehicle supply chain. They act also as a price reporting agency, publishing price benchmarks for key battery materials like lithium, cobalt, nickel, and graphite. As an expert on critical minerals, Mike has spent over a decade within the commodity analysis space, most recently at Benchmark, where he helped launch their world-leading copper forecast service. So, Mike, a very warm welcome to the podcast.
Thanks, Stephen. Thanks for having me. Appreciate the invite.
Not at all. Well, let's set the stage, Mike. Why are countries in the Middle East and North Africa pivoting towards critical minerals now? And what is driving this shift?
Yes, it's a great place to start, like you said, to help set the stage. I want to be clear, it's not as if countries in the Middle East and North Africa woke up this morning and realized, oh, crikey, we need to invest in this space. It's obviously been going on a few years now, but I think it's relevant. And we've seen certainly an uptake or increasing uptake, focus and investment in this space over the last sort of 12 to 18 months. I think everyone is fully aware, obviously, of the region's long dependence on hydrocarbons. If you look at Saudi Arabia, for example, making up around about sort of 50% of the country's GDP last year, Qatar, UAE sitting around 35, 25% respectively. So to use an old adage here, Stephen, I think that's a lot of eggs in one basket, the same basket. And maybe it's a basket that is potentially losing relevance in the future over the long term. So I think with the global energy transition accelerating, there's real economic imperative, shall we say, to diversify. It makes sense. It's perhaps not even just a must-do exercise given the reliance on hydrocarbons. Rather, I think it's, and hopefully it is being seen as a lucrative opportunity for many of those countries. And certainly we're seeing a lot of them sort of doubling down and increasing their efforts in the space over the last sort of 12 months. So you've got countries like Saudi Arabia, Morocco, UAE, leveraging their geopolitical positioning, strategic location as well, but importantly, sovereign wealth funds and industrial policy to support those burgeoning supply chains. And I think that's their way of remaining, should we say, relevant in a post-oil economy. We're seeing billions being poured into space. And importantly, it's not just at home, domestically, but also securing strategic investments internationally as well.
Well, we'll talk about Morocco in a moment, but you did mention sovereign wealth funds there. What kind of role are those funds playing in this critical mineral push?
Yeah, it's instrumental. It's central to, I'll say, all the ambitions that we're seeing coming out of the region. We did a mapping exercise recently, actually, at Benchmark, where we sort of stacked up and totaled up the investment from all of the sovereign wealth funds, or SWFs, across the region. And this is Middle East and North Africa. And the results were staggering, really. And I've never actually taken the time to look at it and stack it all up. But it's incredibly impressive. The region has around 5 trillion in assets under management. And what we're seeing is increasingly more of that capital being deployed domestically and internationally in that energy transition space. And again, that's through, or in a bid to help that economic diversification. So I think UAE and Saudi, typically you're looking around about 2 trillion, just under that combined. And these funds are being used in critical mineral mining. They're being used in the midstream, so refining, and also downstream infrastructure globally as well. The Qatari Investment Authority, QIA, for instance, they're the largest institutional investor for Glencore. I think they have around about 8 to 9% stake, and that's massive. Recently invested in TechMet, which is linked, in turn, TechMet is linked to Cornish Lithium and South Africa's Rainbow Rare Earth. So again, getting closer and closer to the critical minerals themselves. We can't talk sovereign wealth funds and not talk the Saudi's PIF fund, of course, the Public Investment Fund. Obviously, it's very active in the mining space, but also it's taking a downstream stance here. Majority shareholder in Lucid Motors. It backs the country's EV-focused brand Sear Motors as well. They've had JVs with Ma'aden, of course, forming MENA Minerals, whose primary mandate is simply to acquire overseas assets. And we expect to hear more from MENA as time progresses as well. I think one thing, for the readers or listeners, I should say, to take home is that the strategy here from the sovereign wealth funds is certainly one of an incredibly long-term view. It's not one that is fixated on quick returns, immediate returns. It's definitely a long-term position here. It's tied into de-risking. It's tied into that economic diversification point, and also supply chain access and control, where I think, that the key battlegrounds, if we want to call it that, in terms of the next stage of tech development, is focused around the energy transition. And if you have access to these minerals, I think you're going to be doing well from a country perspective. So I think whilst there's reasonable proven reserves, and by that I mean critical minerals in the ground in the region, simply put, you can't cheat geology. But where the sovereign wealth funds are doing an incredible job is accessing that through that international investment. So it's pretty instrumental, Stephen, to be honest.
As you indicated, we know the MENA region has a great deal of oil and gas, which is the understatement of the year. But I didn't know, so forgive my ignorance, that there were plenty of minerals there too. So is the MENA region rich in minerals?
I would say to some extent, yes. I would say it's not going to be a mineral powerhouse like, let's take sort of LATAM or South Africa, Australia. Again, you can't cheat geology, but it does have very, very good proven resources of some commodities. I think Morocco is a prime example where it has fantastic reserves in phosphate. It has a primary usage in fertilizers, but also is instrumental in forming or providing the required substance for LFP cathodes. That's lithium-ion phosphate cathodes and cells, which obviously go on to power our electric vehicles. That chemistry mix is rising, I would say, in importance. It's been around.
Is that what makes Morocco such an emerging hub for battery supply chains?
I would say they're centering it around sort of the access to phosphate. It's a really sort of clever, shall we say, strategy or tactic from Morocco. I think there's a couple of things, Stephen, here. It's positioning Morocco is fantastic. It really has amazing access to the large consuming markets of Western Europe. It's kind of in a trifecta gateway almost with the West, obviously Africa to the south, and in Asia to the east. So it's also got a strong track record already in the automotive industry. In a previous life, I was analysed the wire and cable markets, and Morocco is a great hub for building and manufacturing wire cable harnesses and serving the Western European OEMs as well. So they've kind of got that supply chain in many respects situated. But I would say that a key point here is that phosphate reserves. It's the largest in the world, and I think only second to China right now in terms of what they're producing for phosphate rock. Like I said, there's many different intermediary steps before you get to the required phosphoric acid that you need for going into the battery supply chain. But it's a step in the right direction, and I think Morocco are going about it in the right way here. So there's lots to do in Morocco, and I think it's a great country to use as a bit of a use case for how a country can look at its natural resources and sort of build that supply chain or the vertical supply chain from the raw material through to the end product as well.
How advanced would you say is Morocco's midstream and downstream battery capacity right now?
So I would say it's burgeoning. I would say it's promising, certainly in the pipeline, and it's pretty well advanced in terms of if you're looking at committed and pipeline activity. So we have 3 cathode plants. They're slated to come by 2030, bring online around 160 tons of cathode capacity by 2030. Around 70% of that will be dedicated to LFP, like I said, so utilizing the natural phosphate resources as well. Now, LFP cathode is typically tightly controlled by China. They control the technology, they control the vast majority of the production base. So having LFP cathode facility outside of the in an ex-China sort of location is incredibly important, and it de-risks that supply chain overall. It's never good to have all your eggs in sort of one basket again. So I think LFP is a great move for Morocco to pursue. Admittedly, a lot of that cathode investment is actually Chinese backed, but again, just having the production base in an ex-China space, I think for that cell chemistry anyway is incredibly important. So the most advanced of these is CNGR's facility in Jawf-Lasfar. That's vertically integrated with a nearby pre-cathode facility as well. And that just goes to show that the level of integration Morocco are aiming for. Then you've got anode capacity coming on stream. There's Chinese and Canadian investment going in on that side of things. And then the end result, I should say, is going to be a cell manufacturing plant, or Goshen's, a Chinese firm, 40 gigawatt hour battery plant coming in, again, slated for production around 2027. And that just sort of cements that, all the way from phosphate rock, a few different steps in supply chain, cathode anode, the two different parts of the battery, all the way through to the battery itself, the full integration.
Talking batteries, is there, do you think, a significant, a meaningful demand for EVs, for electric vehicles within the MENA region?
Yeah, I think there's a reasonable demand right now. I think there's going to be certainly a growing demand, and it's probably, if I'm honest, the MENA region is probably following a fairly natural trajectory for many countries, really. We see globally some far more advanced than others when it comes to their EV adoption rates, should we say. MENA, if you want to aggregate the region as a whole, I'd say it's on the lower end of the scale, which I think presents a good upside potential. It's around about 4.4% penetration rate for EVs at the moment, and that's according to last year's stats. Some countries are sort of low single digits, like Saudi, Qatar, and Egypt. UAE is slightly ahead of the curve, should we say, as well. But there's definitely a lot of ambition in the region. I think Morocco, they set some targets around 100,000 vehicles they want to be producing annually by 25. That's, in my opinion, a little punchy, but nevertheless a clear, a good aim and strong sort of trajectory, should we say. Saudi Arabia, you're looking at about 500,000 units by 2030 as well. So I think the region overall is betting pretty big on this, and I think we're going to see more and more of these types of announcements. So I think there's reasonable demand locally, but I think it's going to be the export market probably that it will be easier to unlock initially anyway.
Talking of Saudi Arabia, it's making some bold moves, isn't it, from copper to lithium? How deep is that commitment?
Yeah, they're really they'll probably be one of the countries that I would say are doubling down, to use a term from Blackjack. I think it's Saudi Arabia going big, and they've got in place sort of an overall mandate called Vision 2030, and that really is acting as their North Star, I would say. It sets up those very ambitious EV production targets. So I said 500,000. They want, I think it's 30% of all cars in Riyadh on the road to be electric by 2030 as well, which is a huge step change, shall we say. But mining underpins all of this, and that's where a lot of the investment decisions are going right now. So there's, coming back to your point earlier, Stephen, about mineral wealth. Saudi has pretty strong reserves identified, or mineral wealth identified in the ground. Now, of course, not all of that is economic. I think the latest update to that was about 2.5 trillion sat in the ground. That's largely due, there's a sort of a jump in that to newly identified rare earth resources, which is amazing to see and find. It's, you would have seen a lot of press about it recently, rare earths, and it's their usage in motors, in other energy transition supply chains. But also the reason it's perhaps so important is because of the control that one country has, that country being China. So again, just in terms of spreading your eggs around your basket, de-risking supply chains, it's great to have different production bases for that. But the kingdom is aggressively pursuing it. I think 100 billion investing in the mining sector specifically by 2035. A lot of that already committed itself as well. Investment coming in from overseas partners, US, China, I think the DRC, Australia. So it's certainly going to be a big focus for the kingdom, I would say. They've got some copper production. They're looking to set up or received 2 billion investment from India's Vedanta as well to build a copper processing plant there. So not just what I would deem battery metals, which is lithium, nickel, cobalt, and graphite on the anode side, but also in energy transition metals. So copper obviously being pretty vital for the broader energy transition as well.
And I read somewhere there's gold down there as well.
Absolutely. And there are other minerals, and we could probably spend half a day talking about the full extent of it, no doubt, Stephen. But
well, let's take a podcast quantum leap into direct lithium extraction. What is it, and why is it relevant to oil producers in particular?
Yeah, it's a good question. It's something that I think is very relevant to when we're talking about the MENA region as a whole. We've talked about the long history and exposure to and success in the hydrocarbon industry, and we'll start to see why that's relevant for DLE, so direct lithium extraction DLE. Stephen, I want you to think about it as a shortcut, essentially a smart shortcut. So typically, if you were to extract lithium, not hard rock, but not talking sort of mining activities here, we're talking from brines. You have to wait for evaporation to essentially crystallize out that lithium. So you may have seen images from the salt flats in whether it's Bolivia, Peru, Argentina, lithium being crystallized out from that. That takes months essentially. DLE is a quick shortcut. It essentially looks at the brine. It targeted extracts the lithium chemicals directly from the brine itself, the lithium compounds. So it's a much faster route to achieving lithium production. It's using methods such as absorption, ion exchange, and importantly, it also returns most of the water back to the original source as well. So it's highly targeted and it's fast. So it sounds great on paper. There are some caveats around that, which we'll get to. I think it's also important to note it's not just a single technology. It's more like, think of it of an umbrella term for various different methods of taking that lithium and targeting extraction from brines themselves. Where it's relevant for, I think, the MENA region is some of the sources of brines could be geothermal fluids. It could be the salt flats or the brines associated to salt flats themselves, or it could be oil-filled brines as well. So these are going to be sort of the leftover, should we say, previously probably presented a bit of a disposal headache. It's those oil-filled brines that can pack pretty high concentrations of lithium, to be honest, and think of them more of as an untapped asset rather than as waste streams. So potentially profitable streams of lithium coming in from that. And that's leaning largely on the infrastructure that's all in place. We can't forget that initial sort of process taking lithium out of a brine is very similar to the initial upstream oil and gas workflows anyway. So I think the oil and gas producers are well positioned. We've seen great success and big investment from the likes of Exxon outside of the MENA region. We see Saudi's Aramco starting to explore this with Litech. So they had a pilot plant, which I think was deemed a success. So that's tapping into that existing infrastructure and helping to build out that new lithium supply chain. We've had Aramco JVing with Martin to produce lithium from, again, oil-filled brines, and I think they're targeting commercial production by 2027. So I expect to see more of this in future. DLE as a whole is going to make up an increasing, should we say, resource base or a share of total lithium production out to 2030, 2035. It's now very small, to be honest, but out by 2035, it could be anywhere between 12, 15% of total lithium coming from this type of sort of umbrella technology, and oil-filled brines being a potential target for those producers. But the one caveat here, Stephen, is it's expensive to do. So it certainly sits on the higher end of the cost curve. There's a lot of nuances and challenges associated to it. Each individual brine is unique, so you need a certain technology or a certain process sheet to extract the lithium. There's a lot of contaminants, so it sounds great initially on paper, but of course, as with anything, it's a little bit more complex than that. So,
well, that's lithium. What about copper? What role is copper playing in the MENA mineral strategy?
Yeah, it's big. I think copper, to put it simply, without copper, you don't have the energy transition. It's
as significant as that, is it?
I truly believe it. Yeah, and maybe I'm biased because again, I spent so much time looking at wire and cable. 70% of copper demand goes into wire and cable, and it's everywhere. It's obviously in our homes. But if we think about the energy transition, without copper, you're not going to have the bus bars in batteries. You're not going to have the foil, which would be the current collector in batteries. You're not going to have the wiring to power the individual motors. You're not going to have new renewable energy sources because you're going to need huge amounts of copper to tie them to existing grids. They're in motors for wind turbines. It's everywhere, and I think people often underestimate just how important copper is when it comes to the energy transition. So, and certainly the countries in MENA are recognizing this also. So there is a big, I would say, increased focus on extracting copper where possible in the region. So some reserves, Morocco presents some reasonable reserves in the ground. Like I said, Saudi's got some production, a few mine sites up and running as well. Iran's actually a pretty big producer. It's around about 75% of the region total. But overall, you're only looking at around 500,000 we're expecting by 2030, which sort of pales in comparison to some of the other big producing nations such as Chile, for example. But I think it's important there's recognition of it, and also we're seeing increasing investment focus trying to again gain access to copper via this sort of international diplomacy or gaining direct investments into mining companies internationally as well. So
Well, as we've heard, the MENA region isn't just about oil and gas. It has a wide variety of mineral wealth, from phosphate superpowers like Morocco, Mike, you mentioned, to iron-rich Mauritania, with many countries now eyeing strategic minerals for the energy transition. A final thought from you, Mike. What do you think oil majors and regional leaders should take away from this conversation?
As a final thought, I would say don't think of the energy transition is a threat to your business, your operations, the MENA region as a whole. And I'm saying that because of their sort of success in the hydrocarbon space. Think of it as an opportunity because it is vast. It's not going away. The energy transition is happening. It's only going to increase in pace. It's only going to garner more attention. And I think the region is well positioned geographically, geopolitically, resources underfoot, also available capital through the sovereign wealth funds, the existing expertise. So I really do think the region could become, a cornerstone of what will be the future energy system, really.
Well, Mike Finch, thank you for sharing those fascinating insights on the energy transition in the MENA region with us. And we look forward to discussing what is an increasingly important topic with you in the near future.
Thanks for having me, Stephen. Thank you.
You're very welcome. And thank you for listening. Be sure to keep up to date with the Foundation's latest research, publications, and podcasts through our website at apafoundation.org. And of course, on social media channels. For all the podcasts, it's easiest to listen to them on YouTube and Spotify. But from Mike and from me, Stephen Cole, until the next time, goodbye.